Hey, recording is started, and it is January 11th, 2022. And welcome aboard.
Heat Zone.
And obviously, tough thank you. Interesting day. I had some questions that I'd like to shoot through. So I'm gonna. I see the stock market. You know what I mean? I see that a lot of people say to me, they go on Twitter and they say, "Hey, do you see this on the stock market?" I say, "Yeah, yes, I do." I do see the. No questions, please. Let's jump into questions. I think a lesson on how you determine what a competitive entry is would be helpful. With minimal continuation on these plays, identifying a good entry is what I struggle with the most, at least the technical side of the equation. I know there are other factors specific to the ticker and catalyst at hand that influence your calculation. There are. But I think one of the things that we have to keep in mind right now, because right now what's going to happen is one of two things. You're either going to get very focused and very specific on entry and maybe a bit cheap. And along the way, you might miss something. On the other hand, you might go the direction that I go, which is slap crazy and, by nature, slap crazy and just buy everything that you're seeing moving and hoping something will work out and trying to put your finger on the pulse of anything. You know what I'm saying? But I think the one thing that we always have to keep in mind is this. Okay? Once you're losing more than 20%, you're now on an exponential difficulty scale. You know what I'm saying? Now you've entered exponential difficulty with recovering from a bad trade. And if you'd like to understand the math on this, listen, talk to math guys about it. Okay, I don't know it. But I do know it turns out that their math is correct. So when it comes to looking after opportunities, because right now with how things are, more than ever, you're gonna want to get loose with the rules. You're gonna want to get loose with entries. Hey, this is moving, that's moving, yeah. And when those losses start adding up to more than 20%, I'll tell you what, you got big trouble. Big trouble. So I need you to keep that chart in mind, first and foremost. So talk to math guys. So the question as to whether or not I'm a competitor is whether I can compete in relation to the volume weighted average price. And that's the ultimate question. You know what I mean? Because like LVGI, while let's be honest, like a piece of shit, like this is really rude. There was a point where, okay, and we'll put it on the 1 minute so you could see it up close. There were opportunities, certainly with the metaverse bit, to get in. It was wiki and tough for sure, but there were opportunities to get in near the weekly and even to fill it near the weekly. But there came a point where it was beyond belief, and this was the point of maximum fear of missing out for people, where it entered the real danger zone, and so I think, really for someone to identify what is the correct entry, it's the determination as to whether or not you're a competitor in relation to weekly, and then also a competitor when it comes to key breaks. You know what I mean? So the weekly is one thing, but the other thing that is of importance is key break. You know what I mean? Because this is a level here, this 23, where this plane could not break. It just couldn't do it. It didn't have the power, and today it decided to do it. So at that point, you you can kind of draw a line and say, you know what, they worked on this for quite some time, a month, almost a month. Well, not a month. Listen, 3 weeks, 2 weeks, and finally broke through. And so I know that after that many failed attempts, and they're still coming after it at this level, I know that this level has significance. So I could set that as a stop loss, and then and I may have some time here to get out. It's not a true like zero to hero, back to zero deal. I mean, they worked on this level for weeks, so it has some significance. But at the end of the day, I think that the thing that will be your undoing, and certainly my undoing. What is going on there? Is going to be those reckless slaps where you see a ticker and you feel hopeless. You feel like I can't make a trade anyways. So you know what? Fuck it. I'm just gonna buy this. And I didn't look at the weekly. I didn't look at the support. I didn't look at anything. You know what I mean? But every decision that you make has to come in relation to the level of loss. Now, let's say, you know what, this catalyst is red hot. I love this. I love Plin. It's the best thing ever. And I need it. I need it so bad. I have to have it. Maybe at that point you could say, okay, you know what, I have to have this right now. I think this has a lot of power, not saying Plin necessarily. So, I know that a lot of people got in lower, and I know that people maybe are looking for more upside here. I understand that. So I need to set a reasonable level for me in buying this Plin, where, if you really can't stand it and you have to have it, okay, well, here's a reasonable stop for you then. 15%. So it's not really a good stop, but it needs to be your stop. You know what I'm saying? And oftentimes when I'm getting into trades, I know I'm not a true competitor, and I'll show you a couple today where I had to make, I had to make the decision where, that's my place. Let's say you did buy 2998 on Plin. You loved it that much. Okay, that's cool. Well, I think at 25, you've really got some thinking to do. You can't afford to find out if it goes back to zero. You can't afford. And you've got to always be thinking about where people are in relation to you. So sometimes, something is hot, and sometimes you have to take it off weekly. I mean, Lord knows on DUTV, I had to take it a fair amount off a weekly because I thought it was a pretty hot catalyst. You know what I mean? I had Dub 4, which at the time, anyways, was not great. You know what I mean? It was decently down, but I felt that the catalyst had power, and felt like, I can kind of see a spot here where I'm just going to give it a rip, and if I have to take a loss on the weekly, so be it. So I think the lesson for me in my trading historically is anytime I enter something, if I don't have a plan for where I need to leave, because I always see this bullshit where people will be like, hey, plan where you're going to take your profit. Like, how's that? You know what I mean? Most stocks are going down eternally. And, if you could just plan where you're going to take your profit, then there would be no money to be made in this, right? Like, there'd be no competition. That's the point of this, is the competition. But you should be having a plan as to when you need to leave. Because a good trading is not buying things and seeing them run. Good trading is having the guts to tap out and tap out and tap out and tap out and tap out, tap out, and save the blood in your body for when you finally don't have to tap out. And keep as many of your chips together in one pile for when you finally have that breakthrough opportunity. You know what I'm saying? That's trading. Trading is not buying runners. Trading is not knowing what's going to run. Good trading is not knowing. Good trading is knowing when you're beat and admitting it, and keeping your account whole. You know what I'm saying? And today was was an especially challenging day for me in that sense, because I was met with nonstop challenges to tap out. You know what I mean? That's what it was. And it was just nonstop confirmation that what I'm doing is not working. And that's what it is. You know, that's what it is. If a shell ticker gets uplisted to the QB, would that indicate anything? No, it wouldn't. I mean, the QB, the QX tier, the QB tier, the three tiers that they trade on are more in relation to, audit, like the level of audit, sometimes asset base. But for the most part, as far GE, that's nice.
GE.
As far as, would that mean anything to make this a good trade for me to see upside? No, because you need liquidity. You know what I mean? And if no one cares, then who cares? You know what I'm saying? Someone was asking about my general take on the market situation. It is very, very, very challenging, and the challenge to me is one, and especially if you're new to this market, like in the last couple months, this is unlike anything that I've personally or professionally seen, I guess, because it's just recycled piss. You know what I mean? Like it's just they just keep cycling the pee through, and each time they're drinking the pee. Have you heard this analogy, by the way? They get the pee, they drink the pee, and then it comes out as like double strong pee, and then but each time it's more concentrated pee. You know what I mean? And this is Wall Street talk. So this is kind of what Wall Street guys say. And if you don't know Wall Street talk, that's no questions. This is what Wall Street guys say. So yeah, that's what I'm trying to say. And so the PP, it keeps listen, yeah. No, it's just listen, you're on Wall Street, you're talking to the guys, and that's what they're talking about. Come on. I'm trying to show you the Wall Street insider. I don't know how to come up with that, but that's what it's like. I mean, that's the problem with these plays is they're just they're just decaying. You know what I mean? And so like, and these things they're bouncing old things, but they're not reaching the next level, and they're not providing the longevity where you could say, you know what, I'm really looking forward to this tomorrow, or you know what I mean. They're just on this downward spiral, and so that injection of fresh price action, and that thing that's going to get people excited to get up and get after it next day, it becomes it's in decline. You know what I mean? And it's not something to be afraid of, in the sense that all you have to do is just keep knocking at the door and keep stopping out until it subsides. Certainly from a professional perspective, as far as this program, it is a bit frightening, because I worry about how sustainable this market will continue to be for something like this, and I mean, it's certainly fearful, and today in the price action that I saw, and stuff like that. I saw something that I felt to be um, uh, very just not hopeless. I mean, you know me, my job's to lift you up, and I intend to do it, but certainly grim, grim. So my job is to continue working the levels and working the catalysts and knocking at the door, and that's what I'm going to do. I'm constantly on the pursuit of freshness. But as far as the stock market goes, I mean, it seems to be fine. There's plenty of liquidity, and there's always an opportunity somewhere. As far as the OTC as we know it, it's feeling a bit grim right now. So I'm going to just keep on keeping on. But I'm ready to stop out, and I'm ready to stop out, and it's not it. They're not going to be crowd pleasers, and it's I've got to get to work now on identifying how to make this work, and then determine as to whether or not it will continue to. And I'm hopeful it will, and I won't give up until I'm the last asshole out the door, though. I believe that. So a little bit of Wall Street talk for you, and a little bit of outlook, which is not terribly positive right now. And it was very funny, and that was the final thing I wanted to touch on. And we saw it with this TGGI, where unfortunately, what we're dealing with here is much like what we're dealing with in real life, in media, and all, and social media, and all these different things that we experience now. People don't even know what the truth is right now. You know what I mean? And so when you think of like a DUTV, which 2 years ago was as slam dunk as it gets for basically assuming a merger's there, which I'll talk about. People are not necessarily even sure what it means or what it is. I mean, the whole outlook, and to actually not believe in the AS raise on TGGI and things like that. I mean, we're in a situation right now where no, we're in a situation right now where people don't know which way is up, and it's because they've been getting dumped on and lied to and pumped on and fricked around, and you know what I mean. And you think about all these plays of days past and years past. This past year, they really thought that this merger was there, and I said the entire time it wasn't. It didn't matter, and now those people are gone, and the people that are left aren't necessarily sure what is. And maybe there's an opportunity in that. But what there is for the time being is troublesome price action, and it's going to take a lot of bravery to believe in those catalysts and maybe suck up a little bit of more painful price action on the pursuit of hopefully finding things that are better runners. So very eye-opening times. Here's speaking of eye-opening. Let's open our eyes to stopping out. So my strategy yesterday in terms of managing my risk and my size going into today on a couple of trades that were more charty type trades as opposed to smashing catalyst trades. While it didn't pay necessarily, it did pay off in the sense of managing my making my exits more acceptable. So I'm going to go through them now. CAP. As you know, I decided that I needed to be honest with the fact that I was in a situation where I was not really that much of a competitor with an O2 entry. I was kind of a mid-tier competitor, and I needed to be honest about the fact that for this to go back to the trend line, which it had stuck to for an entire month now, I needed to set a stop. So I put my stop here on the place that I saw as the key break that it again retested and stayed above for quite some time. Going into today, I decided to reduce my position to half size position and keep an eye on it and hope that it would break above, at which point it began to break below, and then CAP went out the door. The other half went out the door today. Is that the whole thing? I think it is, yeah. The other half went out the door today, 25, 24, as it began to fall through. So that was what I needed to do. And you could see actually how poor the bid support and liquidity really was there, because the second it started getting hit, people started running for the door. So unfortunate there. Rubbish the same. At my stop, I decided to choose a rising stop, because I saw this trend line that it was on, and the level that it bounced off of, and even a level where it consolidated for a little while. So rubbish. Cut it in half yesterday because I was not thrilled with the price action, and then final half went out the door a little bit low, but 32 and 314. So my net trade there was a 34 buy with size, half out the door at 43, and then another half out the door at 32 for a net positive trade, but ultimately still a disappointment. But a decent trade nonetheless. So that's that. TLOFF, my warning yesterday came true in the sense. Let me just make sure I got my notes here. Yeah. TLOFF, my warning yesterday came true in the sense that, you want to like an F stock, and they this thing, as far as we know, has 700 million floating bare minimum, or at, I guess at the worst case scenario is 700 million floating, which is a lot. So I was concerned about the gap. 0.7 was kind of the max there if you did it, and then from there it was pretty almost an instant haircut. Going through the weekly would have been your trigger, I guess, to take the L. Well, it wasn't. I mean, because there was no money to be made. You can see here, no one made any money on it, really. I don't think anyone made any money on it. Like if you look at where they filled it, no one really made any money at all. You could see here that here's the first few minutes of the day. I don't think anyone made a dime on TLOFF. And so the warning was fair. Going through the weekly would have been your trigger to stop out. At that point, I decided to wait and see if it would level off. Decided to go with a resistance break here at 57, and and kind of use it breaking through that 5 as my trigger, to pick it up, which I did. It fell apart at the end of the day. Going below the line, I decided to cut the position in half. What I was waiting to see was whether or not Tesla would confirm it, because if Tesla were to confirm it, at the end of the day, the amount of dollar volume that this did was not great considering the level of the catalyst with Tesla. But I noted, 10 million bucks while Tesla's pulling 20 billion a day. But I did note that Tesla, at least not through any official disclosure, nor on Elon Musk's Twitter account, Tesla had not confirmed the details of the transaction. And so my idea was that I'd like to see if Elon Musk or the corporation itself might confirm as to whether or not TLOFF, they're doing this deal. Someone asked me the question as to whether or not, I see that it may not be, the deal may not be happening until 2026, which isn't completely fair. It's, here it is here. They want to commence commercial production on or before the 2026. And so, I mean, whenever you start up a mega project and a mega deal like that in mining and oil and gas and stuff like that, it can take a few years to get offhand, get off the ground. So, I mean, that's an expectation, but the expectation would be that people might begin to treat it as an investment in addition to Tesla. But right now, I'm not 100% sure Tesla maniacs know that Talon Metals is going to be a supplier for them long term. So I decided to split the risk. I have half of my position going into tomorrow. I think I'm going to have to be pretty honest with myself here, at about 55, and say, you know what, if it starts going below, I can't wait and beg for Tesla to come out. So that will be, flat here, 57, and then a small loss, 55, 57 to 55, which is really, it's just a baby trim, which is fine by me. So minimal risk there. LVGI was a case of, great idea with the metaverse news. I didn't see it at first in the morning, and the way I was able to pick it up was through scanning for price action. So at that point, I was able to use the scanner. I saw that LVGI was hitting 10-day and 20-day highs, like nothing, just bing bing, hitting them so fast and then reaching new ones. So I was getting multiple pings on the scanner. At that point, at around 02, I was able to um, run a hashtag search on Twitter, identify the fact that they. So I was just able to launch into the Twitter, um, launch into the Twitter, just dump in a hashtag search there, identify. I saw the news there that said they were getting into metaverse. Was able to say, you know what, okay, where am I in relation to this action? Not great, but in relation to the weekly, what time is my pickup there? 10:06 Eastern. Um, that's not 10:06 Eastern, is it? Yeah, it would be. No, it definitely wouldn't be 10:06 Eastern, because that's 10:05 Eastern. So I want to say this is Eastern time. I don't know what time it is. 10. Yeah, that's what I did. I just hashtag searched it to see if there was anything that popped up. Picked it anyway, so I picked it up 25, which I thought was okay. It wasn't miles off the weekly at that point. I felt like on the share structure. Now I don't just buy something because it says metaverse, but I felt like their share structure update yesterday was decent. It was showing yesterday as 40 million or something like that. I felt like it was a decent share structure at the price at 02, which would, to turn it over 800 grand to turn it over seemed reasonable. Picked it up at 25 here. Was pleased enough. I did a broad order up to 25 to make sure I could get in. I think there was 22 on the ask at the time. Ended up getting 25, which I didn't love. Um, Watched it for a little while. It looked like it was going to be a great trade. I had to sell up at 38. At the last second, got greedy and put it up to 0.04, which then caused me to miss my sell. At that point, I needed to. Oh, those are my sells. Sorry, that makes more sense. Here are my. I was like, what the hell? 933. 933. I bought at 933. So 3 minutes in, after running the hashtag search, took it a bit high, but you can see me there in the wick. Thought it was okay. Watched it for quite some time. 10:05 Eastern. You can see it. that was enough bullshit for me. To see something, especially after like no volume for many weeks. Because the weekly volume weighted average price is the average price that people are buying and selling at, and retail doesn't sell for a loss unless they have to. So when it's immediately getting crushed below the weekly, that the company's printing shares. You know what I mean? And so that resistance of 25 or that I selected, I can show you here, was based on the daily chart where I could see the other times that it spiked, the candle body, so the bulk of the action, maxed out at about 28. So I know that my highest probability of getting out would be around that 28, and the highest probability of it failing would it be to fall below that 28. So at that point, that was my stop there, the 28. And at 10:05, it started to fall below, and I made a broad sell down to 25. I didn't want to hit 25, but I hit 25. So my greed got me at 04, which is lazy, because a smart sell was 38, which I had in the first place, and I chose 04 out of greed for 2 stupid ticks. And then as it began to fall below, I had to cut it off for 25. So another annoying trade. A smart idea. I did get a note from someone who said, "Hey, that was a pretty good trade," and I guess I've got to begin to find happiness in these. But the reason I don't is because they do a lot of damage. They do a lot of damage to the market. They do a lot of damage to the market. That's $1.2 million that may never recover now. And you can see here, everyone that held it is red, every single person. So it's very unfortunate. DUTV was the trade. So the way this works is you have Telegram app. And I put a link in there in the chat to the best Telegram. Now, there are a few other Telegrams, but the best Telegram, and I'll put it in the recap channel. The best Telegram is free OTC updates. There's another one which has more users and it looks like has a slicker logo, but this one is faster. So you're going to get the updates faster. Free OTC updates, as you know, is going to provide you with any updates that happen on these profile pages. So if there's a company profile change here, it's going to show you. If there's a change here, it's going to show you. If there's an address change, it's going to show you. Any change that happens on this page is going to show up on that Telegram channel. The bot's going to post it up. Officer change is going to show. Tier change is going to show. If it goes to yield, if it goes current, whatever, it's going to show here. Website change, you name it. And so the Telegram bot, which I did not have open at the time, so thank you, Jeff, shot me a note and said DUTV has a new CEO, Mark Galswick. So I decided to talk to the gals. And so I said, okay, he's a new CEO, but how new is he? You know what I mean? So what I wanted to do first was identify how new was he. So I'm going to, at that point, I ran a Boolean search here, and I decided to keep it pretty simple. Digital utilities. And we see this is 6 hours ago. Prior to today, there was no Mark Galswick with relation to digital utilities ventures. There were no results. Mark K. Galswick, and I believe there were no results for Mark Galswick. At that point, if I wanted to be 100% sure, I might switch to a site operator and a connector, needs to be in all caps. Mark Galswick, no record of him. So there's still no record of him because the Google search spiders or whatever they're calling it now, I don't know what they call it today, have not yet archived the details of what's on this page just yet. So I know that it has to be new, this name. At that point, I have my confirmation that he's new, and I can begin to identify the DD as to who he is. I can see he's got the future in review, and I see that he is the CEO of something. At this point, as soon as I see he's new, I'm already putting together an order because, I figure it's a merger, and so this is the assumption. The assumption is that this company, which has basically no operations, is shown as a shell risk. The assumption is that they're up for sale, and you can assume they're all up for sale to someone who wants to purchase it and merge a company in. And so at that point, seeing that new CEO, I have to infer that there's a reverse merger here, and I have to assume that whoever he is, I don't know who he is at this point because I don't have the time to learn his life story. I got to get an entry. And at that point, it had moved already very quickly. I felt Dub 4 was competitive in relation to weekly, and I also felt that it was an okay level. It wasn't great, but it was an okay level because this stock here, without a merger, this is this. But now that there's a new guy coming in, and maybe there's a merger, a new company coming into the shell, at that point it's a different stock. So I'm going to take Dub 4. I took Dub 4. I felt as if I would have liked to see if there was going to what the merger was. So at that point I launched into finding out who Mark Galswick is. Found that he's the chairman of Easy Energy Systems Inc. And Easy Automation. Check them out. Look to be a legitimate company. We have him here. He's looking good there. Not looking so good there. And then Easy Automation Systems. At that point, I know it's a merger, and I'm feeling a lot more in control. Now I'll switch to working the 5 and see what other, and I can pick away at the DD at that point. I don't have a ton of time to confirm their revenues and whatever it is. So in this case, I'd rather take a position and maybe lose on it than wait too long and because reverse merger is the number one catalyst. So as opposed to waiting too long, I'd rather take it and lose than waiting for everyone else to confirm the DD for me. So I took it at Dub 4, decent amount, which I was pretty happy with. Dub 4 there at 12.18. Yeah, and the price action is absolutely speaking 12.18 there, Dub 4, which I was quite happy about. At that point, I began to wonder about the state of the market. And the fact that people are just taking a quick scalp out of things and leaving. So in this case, I actually did the right thing and was able to lose. There's my Talon buy in there as well, and was able to lose half at 59, which I thought was okay. I didn't want to, but I felt I needed to for almost 50%. And at that point, I challenged it to stay above weekly. It could not. And then I amended my stop to show to this candle here, which it also could not, and then lost that additional half there at 46, which irritated me quite a bit. And then going into the close, I received the 5 cross and picked up 54, 55. And you're probably wondering, hey man, why not just hold it? Because I can't afford, if I'm in a market where no one knows which way is up and no one believes anything they read anyways, I can't afford to watch it go back to zero. So I'd rather cut it off, take a green trade and challenge it to perform again than I would hold it and pray that it doesn't go back to zero. You know what I mean? So then I picked up, but not with the full size I had before, just a half of that original size, because I'd still like to be locking in profits here, a half of that original size at kind of 54, 55, which I think was a bit too high. But the test now becomes one of whether or not we're going to hear from this company. Is this the moment where this individual begins to speak to people? And is this the moment when this individual begins to lay out his business plan and talk about this merger and everything like that? Because if it is, I need to be there for it. If it isn't, then I'll stop out again at 5. You know, but I got to open myself up to it, and the risk here is that that news could potentially include a reverse split, which, let's be honest, I mean, the more real the company is, that's the thing you got to realize. The more real the company is, the more probable a reverse split is, right? How do you raise capital from here with loads of resistance and billions floating, when you could just split it, start at $1, and whack every bid that you see for 2 straight years? You can't, So part of me hopes that it gets organic interest, and Mark shuts his face for a little while, and they just keep the train rolling. I can stop out at dub 5, which is possible. I don't know. I mean, all you can do is try and just set a stop. So at this point, I've got a living 30, but certainly you can see it here. I mean, that 46 is going to be key, because they don't have a long attention span, and I'm hopeful it will stay up, because I'm not necessarily seeing any extreme dilution or anything at this point. Just old baggies and people taking profits when they can hardly get any right now. But I gotta open myself up to it, and all I can do is stop out. I don't want to, but the last few weeks has told me that it's something that I have to be prepared to do. Plin was another that I liked, and I didn't stick with it, which was frustrating, because I had the idea, the key break, which was very powerful sign, especially after 3 weeks of trying. I set a stop as 23. You can see why, which I thought was a good idea. It touched it, didn't even go all the way below, really, because it's a 30. So why I was focused on the 5 made no sense to me, but I was. And then I got shook out for a couple ticks, and it went. And that getting shook out on my part was a symptom of I don't know if it was a symptom, but it was emotional baggage from the challenge that this market has been. I mean, even the slightest touch of red, which I think explains a lot of the issues that we're having out here. The slightest touch of red, it's like, holy shit, because this is their reality right now. This is their reality right now. This is the problem. And so, as opposed to, I need to continue to put my best foot forward. I need to continue to pay attention to these levels, and I need to continue to have the bravery to hold on to things when they're only dipping on wicks. And I failed on that front on Plin, and it cost me. So, when I stepped back and recap the day, it was very busy and very frustrating. But in retrospect, it wasn't as bad as I thought. And the reason it wasn't as bad as I thought is because I was working the stops, and I was reducing position size when I felt uncomfortable, and I was listening to the chart. And listening to the chart isn't listening to the chart, it's listening to human beings. Or what's being perpetrated on human beings. There's no reason that this should be a loser after months of no volume. There's no reason. I don't know why I do. Do I have to relive it right now? Good, good. Thanks for reminding me. It is a pig. You know, I have to pay attention to what the price action is saying, and the price action is saying this is shit, and the price action is saying they don't want it enough. The price action is saying they're not excited about it. The price action is saying that they, you know, I'll look at it, but you know, I'm very disappointed by that as well. The price action is telling me that people can't stomach this level of risk right now. That's what the price action is saying. And I listened to it and am kept whole as a result. But certainly feel extreme frustration from the lack of continuation. I like, you know what, Prophet Thief? I like it. You know, I like it. I think it's a good setup. And let's get into some tickers now. It's a good setup, and it is boring, and the news that they put out is dull. And it's tough to get like organically excited about it. But at the end of the day, you know, it's not as gross as people think it is. When you look at that daily, it looks gross as hell, but it's not. And like, I mean, it's really not. And you look at this setup here, you know, it's near fully diluted. There's no raise there. It's just there's still some problems there in terms of the selling, but a nice bounce today, still diluting. Obviously, you can see it, but it's something they could certainly overwhelm. And we'll see what tomorrow brings, but it's going to be a lot of work. I think it's just going to be a lot of work because of your dollar volume and liquidity challenges. Like it's hard. Like with them actively whacking bids and you pulling this type of 29 grand, it's tough to get comfortable. It's really tough. And kink is a bag. It's just tough to get comfortable. Like, you know what I mean? And I can stomach that if it's like a shockingly good catalyst and I know like a reverse merger or something like that, and I know like they got to come for it at some point. But smelters next to the solar farm, like, fuck, it's hard. I think you would find it very challenging. That kink, I hold kink in a similar regard to Phil. Yep, my pleasure. It's gonna do a liquid watch list. It's a trying time. It's a trying time, and it's for me. The best practices, for the most part, are keeping me alive, but I don't want to just stay alive. You know what I mean? I'm trying to thrive, and right now it's frustrating, and I think it's in my head a bit too. Phil is a bag. Let's take a look at that. I mean, they've done worse. But this is pretty bad. Like, they've dumped 3.5 billion since August, which is pretty shocking. But yeah, I'm in my head a bit about it, and I mean, we're really, as far as this market goes, really Hopefully not, but certainly staring death in the face right now. Shadow boxing with death. It's just a 30. That's it. It's just a 30. And so you can try another 30 if you like and see if it crosses up, but all you can do at this point is 30. So it made a good move. It had proven liquidity and now the 30 is broken again. So at this point, I see that 30, but you see it's kind of up and down. So at this point, I might just set a price action alert across the top of these candles and then use that as my 30 because the 30s the goal is to see if it tests resistances. You know what I'm saying? So yeah, I think across the top of those candles, it's a thought, but right now, it looks just like another pump gone by that they're not coming back for. You gotta keep peeking your head out. TCRI, it's good. I mean, I wasn't a competitor yesterday, and I doubt I'm a competitor today. Nope, not even close. Not a competitor here. I wasn't a competitor, and then yesterday I have to use this anchor because it's been nonstop volume for 2 weeks, and I wasn't a competitor to that, so I'm not a competitor to weekly, which they took wild, um, and I'm not a competitor to the anchor at all, like even close. So I mean, it looks fine, but there's just nothing I can do. I didn't set this price action alert here for the rebreak the other day and walked away from it, and now there's nothing I can do. I hate to see it, but I'm just there's no way I can be in control here at all at any moment. There's just no chance because as much as this weekly looks okay, guess what? This is their average. This is their average, and they put good action on it just a couple weeks ago. Good action, big. So what do I do? You know what I mean? I have to let it go. X is a bag. AITX is something that I'm watching. As you know, it is a heap, but it's close to fully diluted, and I'm just gonna keep. I'm gonna add an alert here for crossing up and see if it can start. What I'm looking for here is don't do that. Don't do that, please. What I'm looking for here is that cross up of zero and on lower volume and the no reverse split covenant certainly worked for NSAVE, and NSAVE was no skinny mini either. You know what I'm saying? Like NSAVE was a big fat ass too, and they did it. So it's something I have to keep in mind. H-Tup, congratulations. This is a cease trade for me. If you took it with the pending merger, good work. It is a tough trader. But if you were able to pick it up at open, congratulations on that buy, and now you're in okay shape here. We'll see what tomorrow brings. I don't know what that was all about, but you've got a living 30 there. So if you're in H-Tup, I think you have a pretty clear understanding of what would be your stop at this point, which would be 86. And then if it's a key break of a dime or whatever, then you just move your stop up to there and keep moving them up, and hopefully it stays above. I know. That was a bummer. I think one thing, I used to do, which you don't do, thankfully, you're not the type, um, is you want to try and feel sorry for yourself or something, and when you're having a bit of a struggle and you think, oh well, poor me and this, that, and the next thing, and you get in this loop, and at the end of the day, there's no one gives a shit, and you can either work through it, work your stops, work your levels, continue to pursue respect, or quit trading. And my choice is to yeah, let's get serious. My choice is to continue pursuing the future and continue just stopping out, stopping out, stopping out, and stopping out. And at one point, it will pay off. And along the way, along these long roads of failed runners, is quicksand that keeps other retail traders down. And when the right thing comes about, you're all the better for it, and all the more luxurious when it comes to the quality of your entry, and you have the luxury of time to find the right thing and get the right size while they work their way out of shit bags, because they wouldn't tap out. I know this is awful, and it is, but I'm just going to set alert there for 249 on the CMGR. And if they broke above it, there's a lot of upside here if they actually got after it. They're obviously diluting, but if they did break above it, there's room here if they did. So that 249 breaks something I'm just curious about, because I always wondered if they'd ever bounce that thing. Yeah, I mean, to even half of what it was. But right now the dumping is extreme. Bag here. It's just a bag. It's
Bag.
It's a good setup, but it's just a bag right now. So ugh, I'm exhausted from that. Bag.
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 Bag. Bag.
Bag.
Thank you. Bag here.
Bag.
Bag here.
Bag.
Queench. Old custodianship. It's a biotech merger. It is weed biotech, weed scientists, which you know how that goes. Not a ton of good action there. And the holders of the custodianship on it took a queench on the bed. So, I mean, if you want to find out about queench, I mean, that's your zone right there, kind of 4. If you want to find out about that biotech merger, and then your stop would be there at about 35.
Bag.
Rubbish. I've set I will set a 30 alert. Yeah, there's extreme downside. I mean, it's just nonstop downside pretty much. I mean, every single time you look at it, there's just more downside, it seems. It's basically infinite downside. And at the rate they're selling, I mean, it's just one level after another of downside. So, you know, there's a lot. $30 on rubbish. I will take it. We'll keep on keeping on, and CEP trend line also. I'll take that. Good. See you in the morning. Let's continue. Well, I'm going to continue. I'm a survivor, and I'm gonna just keep on pushing. But you know what? It's a real mental test. And if you're up for it, I'm up for it. But I'm looking for a breakthrough here. So GD, and congratulations on your survival, because there's a lot of pitfalls out there right now. A lot. We'll see you in the morning.